All good? Okay. Thank you. Thank you everyone for being with us this afternoon. My name's Yasser and I'm very fortunate this afternoon to be here with you chairing a discussion, the second discussion in fact today, about the Australian market. And I might start by saying the Australian market appears to be everything that the Indian market that we just heard about is not. And so I think we're going to have a really interesting discussion in this session about what's unique and what are some of those factors and attributes of the Australian market that perhaps don't often get a mention in the region and internationally. So I'm lucky to be joined by three GPs from the Australian market, and each of those GPs, who I'll ask to introduce themselves in a minute, has a particularly unique perspective on the domestic market and the region and indeed the international market. They all operate in different parts of the ecosystem of private equity, and so I think we're going to hear some really interesting perspectives. To my immediate right is Andrew Gray, founder and managing director of Potentia Capital. Next along the panel is Rob Koska, also managing director at Adamantum Capital. And right at the end, Matt Fifield, who is a partner at Pacific Road Capital. We're going to hear from each of them to start with just a couple of minutes perhaps. Matt, I might start with you at that end. Just a little bit about yourself and the fund and the part of the market that you guys play in.
Sure, terrific. So my name is Matt Fifield. I'm a partner with Pacific Road Capital. Pacific Road Capital manages two private equity funds dedicated in the metals and mining space. We invest directly into resource projects, and we also invest into service companies as well. And I guess when I think about the relevancy to Australia, we invest on a global basis. We currently have investments in Africa, in Australia, North and South America, and we're headquartered in Sydney with an office in Vancouver as well. And Yasser, is this the time to talk about the relevance of the sector to Australia, or would you like to do that later?
We'll come back to that. We'll come back to that, Matt, if
Terrific.
that's all right.
Thanks.
Your part of the market is clearly different to a lot of the other GPs in the Australian context. So really keen to unpack a little bit more of the detail around the way you see Australia and indeed those global markets that you've already got capital deployed into. Rob?
Rob Koska. I've been involved in the private equity industry in Australia since the late 90s and have recently started Adamantum Capital with one of my old partners, Anthony Kerwick. So we're just embarking on the journey of putting money to work in the mid-market space in Australia and New Zealand. So a $600 million fund focused on investments in the sort of $100 to $300 million space, so stretching up as we find opportunities to generate interesting co-investment potential for our LPs. A generalist approach. Most of the sector in Australia, most of the economy in Australia is services based. So a lot of what we will end up doing is business to business services and some FMCG retail type opportunities.
Thanks, Rob. Andrew?
So Andrew Gray, I'm a managing director at a firm called Potentia Capital, which we began in 2015 with a remit to invest in a sector-focused strategy around technology-enabled services and software assets, principally businesses headquartered in the Australian-New Zealand region, but with sort of growth vectors up into Asia. We founded the firm really because the thought bubble that the Australian market had developed or was developing to where sector specialisation was going to be an important differentiator to get deals done and generate returns. If you look elsewhere in the world, sector specialisation has occurred, quite strongly, particularly in the United States. Even when you've got large generalist funds, they've got sort of sector expertise. And so, my background is in a couple of generalist funds, although focusing on tech and tech services. I was a managing director at a firm called Archer Capital, and a partner at Francisco Partners before that. So.
Perfect, thank you. Matt, I'm going to start with you on this point just to pick up on some of what you touched on initially and also exploring what I often hear, particularly in an international context, a question which is that from the outside looking in, the Australian economy, the Australian market has been a really interesting case study over the last decade or so since the GFC in particular, and also a very widely held perception that predominantly the Australian economy is all about mining and resources. You're in a prime position to share a little bit of insight into what the Australian economy really is and how you see it from your standpoint.
Sure. Well, I think, Yasser, that it depends a little bit on how you define it. If you look at the ASX 200 breakdown, clearly it's dominated by financial services. The number 2 sector is materials, and then below that, healthcare, utilities, services, and on. So at the large end of town, the mining sector, the listed mining sector punches above its weight. In terms of, and there's really 2 aspects to mining. Direct mining jobs in Australian mines constitutes about 275,000 direct jobs, usually a 5-to-1 multiplier on a mining job, and contributes an enormous amount, about 10% of the domestic GDP in the sector. Beyond direct mining, and at Pacific Road, we invest directly into resource-based assets. We also invest into the service sector. And this is probably one of the more interesting areas that has been changing rapidly over the last 10 years. The service sector comprises, in Australia we call it the MET sector, it's mining equipment, technology, and services. It's about a $90 billion revenue sector, of which $27 billion is exported to other parts of the world, and those are equipment, technology, service companies that are predominantly Australian. And margins in these businesses will run 8 to 14%, depending on where you are in the cycle. But as we have come through a pronounced down cycle, what we are seeing across the board is sustained innovation in pushing capital efficiency, labor efficiency, and productivity. And there's a whole growth within the service sector and within the materials and equipment sector that's underway right now that's quite interesting.
And that's certainly consistent across the breadth of the services sector, isn't it? Those attributes, those innovations to drive improved margins, to improve competitiveness given the global marketplace.
Yeah, and touche. I mean, mining's no different than the rest of the world.
Absolutely.
I do think, though, that the falling commodity prices have created a sense of urgency for survival, and survival has created some innovative models in that respect.
Rob and Andrew, you both clearly focused on the services sector, and I think on one measure at least, the services sector probably accounts for around about 70% of the total economic output of Australia, despite those headlines about mining and resources. So how do you sort of break that down a little bit further, though, Rob, perhaps for you to start with? You talked about being a generalist fund and having a wide view on the market, but certainly within that, you must have some areas that you have a tendency to like a little bit more than others, perhaps.
Yes, no, certainly that's right. And, even just filling in that gap between the export piece sort of at around sort of 15 to 20% of the services piece, the number 2 and 3 exports of Australia are actually education and tourism, most of which are, delivered in Australia. So, there's actually, you can be addressing, as a domestic fund, focusing on locally managed and delivered products and services. You can actually be addressing some significant export markets as well, which are leveraged in both tourism and education to the growth of wealth in Asia quite significantly. So those two elements are certainly part of the service sector. The rest of the economy, depending on how you want to count it, sort of 70 to 85% of it is more internally generated. Financial services is obviously a very important element of that, and all of the plethora of activities which run off the back of that, a growing export market as well. And then you've got the sort of consumer piece. I think from our perspective, and just picking up on Matt's point around the drive to productivity throughout the economy, it's seeing companies specialise in where they add value, and it's creating a whole series of outsourcing opportunities in different parts of the value chain. And that sort of generation of more specialised service offerings through the B2B space is an area that we've deployed capital in quite successfully in the past, and we think will continue to evolve in the future. And then on the consumer side, you're equally finding people taking different views as to what products and services consumers want, and either teaming up on a global or a local basis to provide elements of the distribution or manufacturing of that, which you can sort of continue to do in a sustainable and profitably growing way.
Do you think that one of the critiques, again, that I've picked up over the years has been that the Australian economy and Australian businesses within the economy have been fortunate to have been net beneficiaries of a pretty strong, stable macro environment for a long time now? I think 25 or 26 years of uninterrupted economic growth is the latest data point. Does that translate to, and do you see evidence of the fact that Australian business just hasn't been, in the services sector in particular, haven't been ambitious enough, haven't been forward-thinking enough about the opportunity to, for example, grow into the Asian market? Has that been your experience, or is it very much down to case-by-case propositions?
Look, I think you can level that criticism at corporate Australia broadly, that with significant tailwinds from a relatively stable migration base, which is giving a population growth over the last 30 years of 2% per annum roughly on a compound basis, with significant labour market reforms going back to the 1980s, which generated sort of portable retirement savings, universal access to healthcare, that allowed workers to move around more easily around different employers, with the sort of competition reforms which came through and reduced the cost of doing business, again, sort of in the 80s and 90s. There's been a huge amount of tailwinds that corporate Australia has benefited from. And in the context of a domestic market which continues to grow volumes at 2% per year plus output, it's not that hard to keep the top line growing. And so I think there are plenty of opportunities that we see where you can add a bit more operating risk to companies to take advantage of significant market growth potential from assets which have not been fully developed.
And Andrew, clearly opportunities is probably the key word that resonates for you as well. I imagine in the technology space, you're seeing a wealth of potential in that part of the market that at this point is very much untapped by global standards. I think that's right to say.
Yeah, absolutely. No pun on the name potential. But it's interesting. I've spent about 15 years in sort of North America and Europe, and the voraciousness of competition between businesses was pretty extreme. And I think the backdrop you characterise Australia as sort of having is true, as Rob had sort of mentioned. I think from a control-oriented private equity investor standpoint, that creates huge opportunity. And so there's a lot of sort of best practice that you can find and derive from markets like the US, which has sort of been born from just a very intense competitive marketplace, and with relative ease, you can apply some of those learnings or attributes or pulled operational levers in businesses. And it's been a reasonably consistent theme of businesses that I've invested in. And I started my investing career in Australia, actually from the Northern Hemisphere, from Francisco Partners, and the first deal I did was around 2003. But from that transaction all the way through, we've been able to sort of take businesses and apply a number of levers of sort of rigor and really push them to be better than they were, and do that with relative ease. And it's not that you don't have a journey to go through with these businesses, but it does enable you to have a sort of a predictable sort of path of growth and value add over a period of ownership as a private equity investor, and then repackage a business as a higher quality asset that might go to a public market or potentially another private equity investor. And increasingly we're seeing the global PE firms take interest. And so where a mid-market player can sort of take a business that maybe it's just by virtue of its size and either just add value directly to that business or put it together with other businesses and sort of position that for
There must be some challenges though with every one of those opportunities. There's certain to be risks and challenges on the other side of the ledger insofar as that growth potential. In an Australian market context, what would each of you see as the major stumbling blocks or potential risks that businesses in the services sector or more broadly across the economy and other sectors have to grapple with over the next few years? Is it challenges around keeping pace with the competitiveness of businesses right around the world? Is it the capacity to attract labour and talent? What would you identify as being the most challenging of those?
Yeah, I mean, I'd say probably sort of two things. The first, we certainly have challenges in sort of getting, high quality sort of managers, and I would contrast that to the US experience. It was far easier to sort of, you go through a search process for sort of senior management team executives, you'd have a long laundry list and, from where do I choose? And we find that more challenging. That is, I think, a market size limitation. There's also some fantastic Australian managers. They're not always in Australia, whether it's the head of Dow Chemicals in the US or things like that. So there are great Australian managers. The big wide world often puts shiny lights out for them, and off they go into the Northern Hemisphere. So getting labour and sort of senior management can be a challenge. But it's also an opportunity because you can sort of work with teams, and if you put in place processes, which is where we're very rigorous around sort of doing that to help sort of them grow, develop, and sort of learn.
To become
those better managers, that's an opportunity.
Yep.
I think the second thing is probably just sort of dealing with change and uncertainty. I think we're going into a different time. Certainly the businesses we invest in, which is a lot of legacy technology and legacy software and services assets, so very people intensive, and often having to adjust to doing business in a new way. The advent of things like sort of cloud technologies and the prevalence of being able to sort of have technologies which can deliver services from lots of different regions around the world, let alone from doing it in Australia, presents sort of the spectre of sort of change, and helping managers get through that is often a challenge. Sure. and an opportunity.
Yeah. Matt, I'll bring you in here as well. What do you see from your perspective, from both an Australian domestic and an international context? Is it talent as well?
It's got to be people, yes, sir. I mean, inside, so we have a cyclical industry. We hire, we hire on a sporadic basis. The industry hires on a sporadic basis and tries to recruit people en masse. But it takes 8 to 16 years to develop an appropriate skill base to take appropriate risks inside a mine or be able to manage and lead people and drive cost efficiencies inside a mining platform. When you look at the number of geologists and mining engineers that have graduated in Australia or around the world, there was a bump that happened in the 70s. They're all now 60. There was a bump that happened about 5 years ago in the run-up in the super cycle. And so we have this tremendous gap between what I would say is probably 32 to 60, where there are no 40-year-olds in our industry. I mean, there are a couple, but not many. And in fact, that is a persistent problem in terms of driving cost efficiency. It's actually a persistent at the managerial level. We can talk about labor force in a moment, which is another different and changing outlook. But that is internally why Pacific Road, we've been focusing heavily around an operating partner strategy, bringing in people that can coach, guide, and nurture either very young managers or people that are thrust into experiences that they're not ready for. And having a skill set to bring to an active transaction and a growth equity opportunity is really, really important. There just aren't a lot of mid-tier people in our industry. On the labor side, and this probably hits more to the domestic challenges, the nature of work in mining is changing. You are seeing more autonomous vehicles. You're seeing higher mechanization within the Australian coal industry or the Australian gold industry or nickel, you name it. And by and large, that's actually driven by the need for the operations themselves becoming remote and having fly-in, fly-out workers that are very expensive and not very productive and end up with social issues following living that type of a lifestyle. And so the nature of work is changing. That I'm not sure is something that we have fully prepared for in terms of today's 30-year-olds working at a fully autonomous mine at age 37 or 25-year-olds on their way up. And it's just the labor force is changing and the management pool is thin. It's probably the best way to put it. Those are our biggest challenges.
Yeah, sure. I'm going to switch gear now and pick up on that theme in a way around the role, the value add that PE brings in an Australian market context. Rob, I'm going to turn to you on this, and this is a little bit more now about the fact that through the data that we collect and publish into the market on behalf of the industry, it might surprise a lot of you to hear, particularly those of you who might have been in a session this morning with 3 large Australian institutional investors where we talked about the sheer scale of our pension system and how big that is relative to other markets around the world. It will surprise a lot of people to hear this fact that, in fact, in aggregate across the PE market in Australia at the moment, around about 80% of all new capital commitments are sourced from offshore. Notwithstanding that we have this $2.3 trillion capital base. Rob, you've just been involved in and still involved in talking to insto investors in Australia and around the world. What do you put the interest in Australia down to? We love the fact that there is a lot of interest, of course. We need that capital to find a home in Australia. But what are the sorts of themes that you pick up in the discussions, particularly internationally, about the appeal of Australia?
Yeah, there are a few different things which really resonate with international investors. I think from the macro perspective, people take a lot of comfort about that continual economic expansion that you talked about before, since the early 90s. And then they look at the way the country weathered the financial crisis 10 years ago, the very strong fiscal position that the country at a sort of a national debt level sort of finds itself in. The fact that with that strong superannuation system, the pension liabilities that are facing the government are not as daunting as in many parts of the world, and that with relatively low levels of government debt, and positive interest rates, you've got both fiscal and monetary levers that you can deal with, and institutions which have the track record of using those levers to deliver a relatively benign macro environment. So I think that's sort of the first thing that people look at when they think about Australia as a destination for capital. Then I think they look at the sophistication of the kind of the legal system, the ability to invest on a sort of, you know what you get sort of basis, with a sort of an infrastructure that produces the potential for returns in an economy which is well managed and has these upsides exposed to the sort of growth that you're seeing in Asia, but a legal system and framework which gives investors a lot of rights that you would associate with developed markets. And then I think the third element is that you've got an increasing diversity of choice in the private equity sphere around managers who are providing differentiated strategies, and we're all sort of different versions of that exist in the market, and with a sort of a next generation of offerings coming to market, they don't need to sort of buy the whole industry anymore. They can sort of decide where they want to focus, which stage they want to focus, what size of businesses they'd like to get exposed to. And so I think that greater variety of strategies that they can see, which complements the things that they're achieving in the rest of their portfolio, supports their decisions to bring capital into the Australian market.
Andrew, the level of PE activity in the Australian market is well below really what benchmarks against other developed or comparable markets globally would suggest it should be in Australia. What do you put that down to?
The specific numbers actually, if you look at, if you think about M&A as a metric on a percentage of the GDP of the economy, we're about the same actually in terms of, by comparison to the UK and the US, sort of around sort of 7% of the economy is in sort of transaction sort of volumes, and similar to the US. If you look at participation of private equity in that M&A volume, it's about 16% of M&A transactions in the US are executed by private equity, and about 5.7% in Australia. So it's actually quite stark. And this is a hypothesis I have, which is partly driving the reason we're looking at specialising as a firm. But it's specialisation, and so if you look at the development of private equity in the US economy, you've got significant sector specialisation and subsector specialisation. So in the technology area, you've got firms that, in a private equity context, not venture capital, will specialise in things like B2B software. You've got dedicated retail funds or consumer goods focused funds, etc. And I think that sector focus develops a skill base within private equity firms that allows them to be far more sophisticated in how they participate and add value and drive value creation in the economic sectors that they're sort of looking at. And I think it's a natural, frankly, progression of any sort of private equity market, and I expect it to occur in Australia. It's a little more challenging to have that just by virtue of size. So if you look at some of the mega funds in North America, such as a KKR or a Blackstone or a Bain Capital, et cetera, within those very large organisations, they've got their own subsector sort of specialisations. And so it's been a little more difficult with the generalist funds that have really dominated the market thus far. In Australia to develop that capacity within a firm, but I think it's sort of starting to occur, and so maybe you'll see some of these generalist funds that have had a few successes in certain areas that really like it, and they'll go off into maybe more healthcare, or et cetera, or you'll see firms start up with a theme that they are pretty excited about and really look to apply investments in those areas.
So it's almost lending itself to somewhat of an organic sort of move down this pathway. Rob, do you agree? Do you think that this is what we will see? Because I think it would be right to say across the Australian landscape for GPs, there would certainly be a predominance of what we would broadly call generalist participants in the market. Do you think that will evolve in line with Andrew's views there?
Yeah, I think it must. I mean, specialisation is a feature of the maturation of almost every industry, and you know, as we see in many sectors of the Australian economy, you know, it does lend itself to sort of somewhat oligopolistic behaviour, and you know, the firms which sort of started sort of 15, 20 years ago established good market positions, good investor relationships, and sort of told the story around needing to preserve that because there wasn't a lot of opportunity and not a lot of deal flow. Now, obviously, I'm going to tell you a different story because I'm coming into the market now and seen to the evidence of the last 12 months as we've been looking for investments. There's plenty of deal flow and plenty of opportunity when you have a different economic system, as a new fund does, not built around sitting on top of large amounts of assets under management, consuming significant fund management fees, but a system which is more focused on actually generating returns through investment returns in line with LP returns. There's plenty of things to go and do. So I think there'll be more of that as people are come out with that intention to really sort of think about how they can create investment returns for investors and shake up the oligopoly which has existed for quite a long time.
Yeah,
I would add just a quick additional comment to what Rob said. I think specialisation and skill sets in private equity is also something that's been maturing. So if you look at the North American market, I mean, private equity really started in the 70s. And it really started in the early 2000s in Australia, maybe in the late 90s, but really the early 2000s.
Still fairly young, yeah.
Very young. And so you've got a bunch of emerging managers that have come out, learnt that skill set to be a private equity investor and driving value, and have done so now within some of these older firms for 10 years, 15 years. And they're now sort of starting out saying, hey, you know, let's take that learning and continue to accelerate the value creation, maybe as a new fund like
that's
Rob
right.
or I have.
I think that's a fair point. We're sort of seeing that transition, the second generation. Rob's still very young, of course, and yourself, Andrew and Matt, all three of you. And so we're seeing that generational shift sort of occur right before our eyes. Matt, you've had a sector specialisation, of course, from day one at Pac Road, and so you will have some insights into how even a firm like Pac Road, which started off with a very sector-specific specialisation approach, has itself had to continue to evolve that and recycle the learnings that have been accumulated over the 10 or 20 years.
Well, I think there's some meaty topics in there in terms of being a business for a decade and what you learn investing through a down cycle and all the rest. To turn back to your earlier question on the topic of specialization, this is a center of excellence for Australia. And in terms of globalization, intrepid Australian miners cover almost every square inch of the globe, and with them they bring their Australian service companies as well. So when you're wondering why house a sector specialist out of Australia, it's for that center of excellence. So as we have a predominantly US LP base with a little bit of Europe as well, and I think that our LPs are looking for uncorrelated returns or making timing calls around the cycle or around our strategy. And when you look around, we are a specialist sector, but there are very few people that have been at it for as long as we have. Therefore, that's why I think you see a fair amount of funds coming from offshore. What do you learn over a decade of being in? We're starting to see sub-strategies emerge. So at the moment, there are firms that are basically private debt firms that are looking for the wrinkle between what used to be a banked market, and now banks have pulled back Basel III or otherwise, and allocating less capital further down the risk spectrum. We're seeing private equity and mezzanine style returns today available repeatably in the mining sector. In my opinion, that's also something that will close. So what you need to do across the cycle is be adaptive and look for where the opportunities are to make money. Most of our people have been through a couple of these cycles, and so we can see what's coming and understand how to position for that.
Yeah. Time's going to get the better of us, so I'll ask any of you in the audience that might have a question to please get your hand up, and we'll get a microphone to you. But just as we get ready for some questions, I might start, Andrew, with you at this end and work through Rob and Matt as well on this. But there are a lot of LPs here at this event, and I've been fortunate, as have many of you, to be able to talk with a number of them over the course of the last day or two. If you were talking to LPs right now in this forum about why they should be excited about Australia, why they should be thinking about Australia as a market and a destination for their capital investment, how would you tie together the themes that we've touched on this afternoon from your perspective?
Yeah, well, I mean, being a little sort of self-centered on that, because we've been having clearly a lot of those discussions over the last couple of days. So I'll focus on what we're trying to tell investors. And in the macro thematics, I think we've sort of talked about a strong, growing economy backed by population sort of growth, and it has been doing it for 26 years. We expect that to continue. An underpinning of a very sort of Western-oriented legal structure, so security. And nowadays, frankly, different from when I first came back to Australia in 2008, a really clear regulatory and tax environment for investors to very safely invest and safely get return of capital on a capital account, and that's now really unambiguous. So that's good. I did go through a bit of a period where there was a few balls up in the air as the Australian government tried to understand private equity and understand the large inflows that have occurred from foreign sources. So that's a big plus. And then for us specifically, it's we think that we're at a point of maturation in the cycle where specialisation will enable us to drive really significant outperformance. I'll concur with Rob, and we and maybe it's because we're just focused on sort of on new deal activity, but we certainly have a portfolio today. But we see more things than we can prosecute, and the good thing about that is we get to be selective about the types of opportunities. So the ability to source really high quality deals,
Okay, Rob.
I agree with all the things that Andrew said. I think for us as a slightly more generalist firm, it's having the umbrella of large corporates which need to generate productivity improvements and need to do that by incorporating the provision of services into down into the food chain. That's where you get great opportunities for companies in the size range that we're focusing on. That's a sort of a macro trend which has got a long way to run, and that's what we're taking advantage of.
And Matt?
I guess my comment relates more to the sector than Australia, if that's all right. Yeah. But where we sit today, Yasser, is after 6 years of cuts in capacity and people, and each day there's more people in the world living longer and consuming more. And when we look out 10 years, which will be our exit environment for money that you'll allocate today, there's just a gap. And that gap is going to result in higher threshold pricing, incentive pricing to mobilize new projects. And it's a very exciting time to be involved in the resource sector right now.
Yeah, and I think the point that you make about Australia being a centre of expertise or excellence in a resource context is certainly very relevant to that. Any questions from anyone in the audience this afternoon? Looks like everyone's very shy. So we will leave it there. Please join me in thanking Matt, Rob, and Andrew this
I think we
afternoon.
might.
Thank you.
Oh, sorry.
It's all right. We didn't have it. Oh, we did.
Was there one question?
Either a stretch or a question.
Of the chap in the grey hair. No.
No?
Stretch.
Okay.
There was a
All right.
stretch.
Okay. Please join me in thanking them. Thank you.
Cheers. Yeah.